What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Welcome to the family. Hey, we have a lot to cover as usual, but first, please don't fall for spam in the comments section. I don't have a WhatsApp or a Telegram, and I don't trade anybody's money, all right? Make sure, if you're new, to hit the like, subscribe, notification bell. And if you've been rolling with me, continue to hit that like button. Thank you, family. Let's get right into what we have going on in the markets today. Now, for those of you that's been following the page, you know I've been saying Q1 earnings, Q1 earnings, Q1 earnings, and to the fact that we need to watch what are they. Now, a lot of analysts have been predicting that we will go into a earnings recession, meaning that the earnings won't be good and forward guidance won't be good, right? And so that will be, on top of everything that we've had in this bear market, including the banks collapsing, right? Now we have a credit squeeze, okay? So that was made evident by the raising of interest rates, right? So there I go with right. So I owe myself $1. I'm gonna put a jar here. Every time I say right, I'm gonna start putting $1 in there. Okay, so I want to go over some charts here, and we're gonna look at a few things that are going on right now. All right, let's talk about Tesla for a minute. Tesla is pretty flat today. It's not really bad. Tesla's really flat. The reason I'm bringing up Tesla is we do have earnings coming soon for Tesla. Let's see, when is the earnings for Tesla? There it is right there, good people. Q1 earnings is April 19th, all right, 2023, April 19th. So we will see what the earnings will do for Tesla. Tesla has yet another price decrease. So that news was met negative at first because if prices are decreasing continually, this is like the fifth decrease in price, then you start to squeeze margins, okay? Profit margins. U.S. employees added 236,000 jobs in March, which was the lowest monthly gain since December 2020. So that was the lowest gain, right? So jobs are still looking good, but they're slowing down, right? All right, so I keep saying, all right, there we go. I owe myself about $10 right there. That was the first job report in a year that came below expectations. We are still high, but the rate of wages are cooling off. So what employers are paying for talent is cooling off. And so that all has to do with the job numbers, all right? The job reports and why they are so important to the economy and what the Fed's reaction is going to be. Today is a pretty flat day. If you ask me, it's pretty flat at the time. There's 10 minutes before closing bell, so I won't be getting this up before closing bell. Let's look at that. As we can see, the Dow is positive 60 points. Everything else is pretty flat. I would say this is a flat day. Neither the Bears or the Bulls won. So Friday's jobs was like, just like I said on Friday. The market was closed, but the pre-markets were up. Actually went up a little bit, but that's neither here nor there. All right, let's keep it going. Let's look at some of the things that we have coming. We got banks coming. Banks starts their earnings this week. Banks do, right? So let's look at banks. Here at the top, we got a community bank, right? Should I say regional bank? And then I have three of the big dogs at the bottom. JP Morgan, Bank of America, Wells Fargo. Those are the big banks, okay? You could see, of course, the community banks at the top, the two at the top, they are down by double digits. But the big banks are down by single digits. And so here's my question to you, and you tell me what you're going to do. Remember, anything I say is not a suggestion to buy, hold, or sell, but I'm just pointing you in an area that has a potential to make money. Now, it is my thought, it is my frame of thought that the The banks that are the big banks did not fall as much. Why? Because people were pulling money out of community banks, or should I say regional banks and community banks, because I went to one of my community banks, and they were putting it in the big banks. And you have massive deposits that were lost, all right? Over $100 million in deposits were lost. Actually, more than that were lost during this whole run on the banks, let's call it, right? So let's see where we can make money. So if you look at this, I think that this was an overreaction, and I think that this was an overreaction. But I also think that this was an underreaction, and these were an underreaction, right? So I don't know if I'm going to be playing banks at all after First Republic. First Republic spanked my butt. So I don't know if I'll be getting into banks at all. But if for those of you that are going to be buying banks, I want you to keep your eye on this. For those of you that are doing option plays, I want you to consider this in your consideration of everything. Buy the rumor, sell the news. I make the most money on earnings by using buy the rumor, sell the news. Meaning there is an event, which is earnings. I buy it on the rumor that this event is going to happen, but I sell before the news. That's what buy the rumor, sell the news means for those of you that are new. Let's look at what's another bank? New York Bank, right? The New York Community Bank. Okay, let's go back here. Now, New York Community Bank was a community bank that didn't fall so much. All right, so we're going to replace Wells Fargo. We're going to put NYCB, I believe it is. Yep, there it is. And as we could see, look at this in the last month. Now, remember, all of these are on the month. So look at this in the last month. It's went up 19%, right? So it didn't fall as much. And it's a community bank. It's one of the banks that I got into. For those of you that's been following me, you know that, right? And so these are some of the things that I just want to talk about and point you in the area of. I'm not telling you to get in or get out. If you were going to do banks before you saw this, let me know what your plans were. If I shined a light a little bit on something else that you didn't see in the banks, then leave me a comment on that. So what I'm going to do right now is I'm going to play a snippet of a video, and we'll end it after that. But before I play the snippet of this video of a conversation that I need you to hear about earnings in general, I want you to make sure to click the top 3 links below, right? Number 1, the class, stock up. I'm going to be adding another class tomorrow, which is Tuesday, to the Stock Up University. Do yourself a favor, come join the family, learn more, earn more. That'll be the top link below. And below that, 15 free stocks with Webull. And Webull, of course, shows you a nice, clean layout of upcoming events like the heat maps, and more importantly right now, the earnings. It tells you what companies per day, when they will be reporting, okay? We want to stay up to date on this information so we can make money. So now I'm going to play you out with this video. We'll see you tomorrow morning live. Live, love, laugh, and learn.
The official tally is for about a 5.5% drop. By the way, these are about the biggest decline since the third quarter of 2020. So some of the worst performers and how we got here include materials, whose earnings are expected to be down 33% from 2022. Healthcare down 19%, and tech down about 14% as well. Most of the pain there, by the way, in hardware and in semiconductors. Now, on the flip side, in terms of the positives, consumer discretionary. This one is expected to have a growth rate of more than 35%. Also, the industrials expected to be up 16%, energy rounding out the top 3 as well with an 11-point gain. The financials are the only other sector expected to see positive growth. And speaking of financials, this is the first earnings season since we had some sector reclassifications last month. one of the tech subsectors was dissolved, moving the likes of Visa, MasterCard, and PayPal into the financials. So it's a little growthier now. ADP and Paychex were moved to the industrials, and elsewhere, Target, Dollar General, and Dollar Tree were all moved from consumers to consumer staples, I should say, from discretionary, which kind of makes sense if you think about it. And given the pressure on earnings, my next guest says it's all the more important to find franchises now with durable earnings power. Joining me is Julie Beal. She's portfolio manager at Kayne Anderson Rudnick and a CNBC contributor. Julie, it's great to see you. Overall, I mean, do we call this an earnings recession?
I think it's going to be pretty mixed. It really depends on the type of businesses you have. You can see some places in consumer discretionary doing well. You can even see some places in tech that are actually doing okay. Some of the software vendors that have really, strong, sticky, recurring revenue, they're going to be okay. But if you think about certain types of businesses, particularly in financials, and I'm not just talking about, your smaller, but I think all the way up and down, it's going to be really challenging. And I think everyone is going to be taking a much deeper look at what's happening in terms of their credit quality.